there, everyone. Jamie with Sell for 1%, and we are joined by our favorite lender at Equitable Mortgage, Rich Circone.
Say that name again, please.
Circone.
Say it correctly.
We're here today to talk about interest rates and what's going on in the marketplace. Rich, you got a pretty good idea of what's going on, and would you like to inform all of us lowly realtors?
Well, thank you, Jamie. As I look down upon you,
From upon high.
Well, we need to look up because actually rates are going up, not down. And
boy.
I don't really know why, but we were, I think last week talking about mid sixes. Now we're talking more like the 6.75 range. And again, it's very dependent on loan amount, loan to value, credit score. One thing I will mention on a positive note is if you're a first-time home buyer and you're buying one of those homes, if you can find one in Central Ohio in the 250 or less range, as a first-time home buyer, there's income limits on this program. But if you can get yourself into one of those, the rates are very attractive on first-time home buyer programs. You can do a 3% down, and your rate would be in the high fives right now, believe it or not. So first-time home buyers are given an advantage here to try to help them get into a home. The government and the Fannie Freddie conduit is definitely, with these adjustments, the prices that we've seen. The positive thing I can say is they are trying to incentivize first-time home buyers to be able to win a home and to get it to a reasonable payment.
And they
so high fives.
And they, recently on FHA lowered the PMI amounts too, correct?
Correct. The FHA PMI rates went down slightly. They went down about 30 basis points a month on a monthly basis. We're hoping they also lower the upfront mortgage insurance that FHA requires. Currently, it's 1.75% of the loan amount. But these 5% rates, these rates in the high fives, these are conventional loans.
Okay.
Conventional loans. And we also have first-time home buyer programs with 100% financing, no PMI. So 100% financing, no PMI, down to a 620 credit score, conventional. That is another very attractive program. Now that rate with 100% financing would be more in the high sixes again. But again, you have no PMI and you have no down payment. Again, there's income limits on these programs. Roughly household income about $75,000. It depends on your area of town, but that is another very attractive program. Those are two things that we can offer the first-time home buyer here.
And so, quick question, Rich, on the first-time home buyer, if it's a couple and one of them had owned a home previously, can they still apply with the other person's first-time home buyer ability?
Yeah, that's a good question. Now, the 100% program, no. The 100% program considers household income, household conglomerate, what is the situation. But in the 3% down program, rates in the high fives, yes, if they meet the income limit qualifications, then they can slot into that program. Okay. Also, if you on the 3% down program, if you have a husband and a wife, and we can qualify the husband or one of the spouses under the income limits, then we can use that program and disregard the other person's income. Now, I don't want to get into weeds too much, but the 100% program, we have to consider the entire household income.
Okay.
And then on the 3%, can they use OFA for the down payment assistance?
No, this would be this is not an OFA program. This is a conventional program, and there's no down payment assistance on this program. They can use a gift from a parent or something like that, but they need to have some sort of a conventional down payment, something that a conventional lending would allow for the 3% down.
Okay. All right. Well, that's all good information. And there's a lot of properties in Central Ohio that are below 250. And, you know, condos, would this be applicable to condominiums?
Yes, as long as it's conventional conforming condo, we can, as long as we can, you know, do the checks on it and it comes out as a conventional conforming condo, we can use this program. Yes. Okay.
Yeah. And so I don't know if we've run any stats recently. Jay DeBaum, you're the one normally looking at that kind of stuff, but I'm guessing that probably 20%, maybe 25% of the listings in the MLS are going to be in that 250 range or lower. Would you agree, Jay?
I have no clue what the numbers are on that right now. Probably the average is 330, 340. I have no idea. I've not run the numbers to see what's below 250.
See, I try to get you involved in the conversation.
I mean, my thought is there's not very much for 250 or less right now, boys.
Yeah, I would agree.
I mean, I'm thinking you're going to be, you know, there's only 600 in Franklin County total. This is going to put you inside of the city. You know, it's slim pickings. I did a search for a guy the other day in Grove City up to 250, and there was 4. 3 were mobile homes, and 1 was a condo, and that was, you know, 250 price point. And I had a listing sitting at 250, but it goes into bidding war and sells for 290. And
right.
So, you know, just like it, I would imagine it's a low number.
28%.
Yeah, see, I was pretty close. I said 20-25.
Yeah, about 2179 current active listings when 626 of them are currently at or below $250,000. That's including condos.
And like Jay said, you know, I've done those searches and I get trailers a lot of the times as well, or mobile homes rather, I'm sorry. And even in Dublin, see a lot of those as well. So
there's a very nice neighborhood of mobile homes there off of Avery Road in Dublin.
Right.
So I'm just saying is that there is a fair selection, and sometimes, you know, I know that a lot of sellers, they want to be in certain areas because of school districts or proximity to friends, family, whatever it may be. But 28% of the market below 250, it's a fair number of properties to select from. So I'm just saying, don't discount that number. All right. Anything else there, Richard? Where do you predict interest rates to be next week and a month from now?
Well, I mean, I still see analysts that we follow saying that they feel that the Fed will at some point relent, and that we'll see the rates slide into the 5s still in the coming months. I haven't seen it yet, obviously, so I'm only repeating what I've heard. But at the same time, I think we're waiting to see what the Fed does and says at their next meeting, which I don't have at the top of my head when that is, but it's sometime in May, I believe. And so that will be one of the more important Fed meetings, whenever the next Fed meeting is, because if they raise or lower and what they say coming out of that in terms of the future plans is going to be very, very weighty on what the interest rate markets see in mortgages.
All right. Well, we appreciate your time here this morning. All good information. If you're a first-time home buyer especially, give Rich a call. Got questions about that program or programs, and see what Rich can do for you. That's the one neat thing about a mortgage company versus a bank, is that mortgage companies tend to have a lot more products that they're able to offer. And there's normally something out there that will fit your situation. It's just talking to the right loan officer, such as Rich, who can identify your situation and plug you into the right product. And so thanks again, Rich. Appreciate your time.
You're welcome. Thank you, Dave. Thanks, guys.